Good evening, everyone, and welcome to our program tonight. I welcome you let me turn my camera on. I welcome you on behalf of Alpha Kappa Alpha Sorority Incorporated, Epsilon Pi Omega Chapter. And this evening, we are going to get a little smarter together.
Or I can go to my file tab,
Okay.
go to the backstage.
I'd like to introduce our presenters this evening.
When I hover over that
One presenter is Renee Peterson McFadden, who is a vice president and sales executive at Distinguished Programs, a national insurance program manager partnering with independent insurance brokerages that specialize in real estate, hotels, and restaurants. She is a multi-state licensed property casualty insurance broker and a graduate of St. John's University. She also holds designations such as Certified Insurance Counselor and Certified Programs Leader, and was named Industry Professional of the Year by Professional Insurance Agents of New York in 2016. Last year, Ms. McFadden was elected to serve as the first Black female president of the Insurance Brokers Association of the state of New York, an association founded in 1898. Ms. McFadden is very active in her profession and her local community, a resident of Southeast Queens and a proud mother of 3 adults. And let me introduce you to our other presenter this evening, Mr. Garland Boyd. He earned his Bachelor of Science degree in marketing from St. John's University and is an active member of Kappa Alpha Psi Fraternity Incorporated. He is a member of the Queens Alumni Chapter, where he serves as the chapter chaplain, social action chairman, and executive board member. He has been with Allstate Insurance Company for over 34 years, holding various leadership positions and achieving numerous awards and accomplishments. Garland's last position was field sales leader, where he led over 67 Allstate sales agencies located throughout the metropolitan area, Westchester, Putnam, and Rockland counties. Garland earned the prestigious title of Key Manager and was a national conference winner in his tenure in management. Garland is an ordained elder in the African Methodist Episcopal Church and serves on the ministerial staff at Mount Moriah AME Church in Cambria Heights. He is the Chief Operations Officer, in addition to he and his wife being the facilitators of the marriage enrichment. Garland is also the financial wellness ministry leader and a Bible Institute instructor. Garland left Allstate Management in 2007 to become an agency owner of the Boyd Agency of Allstate Insurance Company. The Boyd Agency is an agency of change that helps the local Queens Village community. Garland holds licenses to sell property and casualty and life insurance products. Garland is also licensed to sell securities products and holds NASD Series 6, 63, 20C, and 51 licenses. Garland is happily married to his best friend and beautiful wife of almost 29 years, Adrian Alexander Boyd. And together they have a lovely daughter, Simone, who is pursuing a PhD in clinical psychology from Rutgers University. Ladies and gentlemen, I give you our presenters for the evening, and let's all get a little smarter. Over to
If right
you,
now, if I choose save, it
Miss
won't ask me what to name
McFadden.
it because it's already got a name.
Thank you
If
so
I
much,
click on
Kim.
Save As,
Appreciate
you're
that.
gonna
That
get
was a
some more
great
information. So I
introduction.
changed it from OneDrive to
Pleased
this
to have
piece.
everyone here
I went to the
today. So we're
desktop,
gonna start with
I made a new
a quote,
folder that I
a
named
life
Finished Word
insurance
Documents.
quote, and
I had
just to
type
kind of
that
get
name and hit the Enter
everybody
key to actually
um,
stand in that folder.
warmed up. So buying life
And then
insurance
I
is
kept
like
the same
fixing a
name.
leak
You
in
can
your
change
roof.
it if you like.
The
I have
longer
that
you
in the
wait,
memo.
the more
And then I hit the Enter key to
expensive
hit
it
save to put
gets.
into that folder.
Garland.
Now, if I click save again right now,
I was saying
I'm sure
to
this is
Renee
gonna go with
when
the new one.
we were preparing
All right,
this
so your turn.
presentation that
Finishing off your
was
letter,
looking
and
at
you are
the
saving
quote,
it,
and just want to also
and you are
share
creating a
that
folder
in my
to drop it
office,
into.
we also have
So catch up with me there,
some
everybody.
top fives of that
So far,
I
we've
want to
talked
share
about
with everyone
entering
today. If we
text,
can just go to the
editing
next
text,
slide.
saving our document. Now I'd like to show you something in the background. Not the backstage view, but something that's happening
And the
that
top
you just
five
can't see.
reasons to just say
You
no
may
to
be
life
old
insurance,
enough
to
to
just say
remember
no.
the
It's number
Wizard of
one,
Oz with Judy
I don't
Garland,
believe in it.
where they walk in
I hear
and
that
they
all the
catch
time.
the guy who's
Number
actually the
four, that
wizard,
there's no
and he
money
says,
in it
"Ignore the
for
man
me when I
behind the
die.
curtain." I'm going to show you behind
Number
the curtain
three,
right now.
I've done the math
I'm going to go
and
to the
it's
Home
too
tab.
expensive. It's
And I'd
cheaper
like to
for my
introduce
loved ones
this
to
object
deal
right
with
here.
all the mess that I will leave behind.
Kinda looks like a
Expenses, the
backwards
gift that
E.
keeps on giving.
I've heard different names
Number
for
two,
it. Paragraph
I want
C,
my family to struggle. I
hard
didn't like those
return.
people
I
anyway.
recently read its official name.
And the
It's called
last one,
Pilcrow,
and the top reason, I
Pilcrow.
plan to live
If
forever.
you would like to impress your geeky
I've
friends
heard
later
them
this week,
all. And
Wow.
these
know
are
that you were
actual
studying
things
a
that
Microsoft
people have
Word class
actually said
and
to
you
me
learned about
as
the
to why they
Pilcrow.
will not buy life
But don't
insurance.
tell
But we'll
anybody
talk
else.
about life
The
insurance
IRS, so you're
later
okay.
on.
You just
Back to
tell
you,
them
Renee.
learned about it,
Thanks,
they'll be
Garland. Yeah,
curious, and
that's
they'll go
pretty
look it up.
funny. So
And they'll be
a
real
tidbit
disappointed
before
when they
we
find out what
delve
it is,
into
but you'll
tonight's
indulge them
workshop.
easy for 5 minutes.
I didn't
When
grow
looking
up
up
saying
the
that I want to
Pilcrow.
be in
Let me
insurance.
show you what it actually
By
does.
way
So as
of
I
being in the
hover over
right
it, it
place
says,
at the right
show or
time,
hide, and then
being
type the
open to
Pilcrow symbol.
opportunities as well
So
as
I'm gonna actually
sponsorship.
click on that,
I got
and
into
ooh,
insurance
there's a whole bunch
28
of
years
stuff that suddenly
ago.
appears.
So throughout my
A whole bunch of
professional
little
journey,
Pilcrows.
I've learned that key components
Think
of the
about
insurance
where that
industry
Pilcrow
are
symbol is.
it's recession proof,
And what we did
it's a
right at
people
that spot,
business,
you'll
it's a
realize that
hedge
Pilcrow
business.
symbol
And because
simplifies
insurance is
placement
regulated and governed by contract
also
law,
called a hard
I
return.
learned
So
something
we
new
typed in
every
memo, we hit
day.
the enter key, it
So
jumped out
I
and
say
created the
that to
next
say
line.
I would
We put in
encourage
today's date, we
you,
hit the enter key.
your children
Replace it, there's
to
one of those
really explore the
Pilcrows,
opportunities
there's an
in
enter key.
insurance because
Notice here
it's
there's
a quite an
Pilcrow ending
amazing
this
industry.
paragraph, and then another
So we're
Pilcrow
going to
in
go
yellow,
over the
blank
goals of the
gap between
workshop.
the two paragraphs.
It'll be interactive,
Also notice
informative,
where it did the word
and
wrapping.
relevant.
There is
We'll have
no
some polling
Pilcrow
questions
there.
throughout. It's going to be
It's
high level,
automatically wrapped
so
at
there
the
won't be any
margin.
deep sea diving, we
And if it can't
promise.
fit a whole word in
As
there, it
questions
doesn't
come up,
hyphenate it
do
by
not
default. It
hesitate to
carries the
pop them
whole
into
word
the
to
chat.
next line.
Immediately following the workshop,
If you
there
don't see
will
a
be an
Pilcrow, it
opportunity
means
to
that you
ask
got word
questions.
wrapping, not
We
enter
ask that you
keys.
use the raise hand feature
Anytime I
to ask
needed to
questions,
finish off a line that
or
wasn't long
again,
enough to
utilize
wrap,
the chat.
I needed a
We've
Pilcrow.
carved out an hour and a half for
Needed
tonight's
an enter
workshop.
key
So
there.
if we're unable to
One of the
address
reasons
your
I'm telling you
questions
about
this
the
evening,
Pilcrow
we promise
is
to get
because
your
the next
questions
document
answered
that we're
soon
going to
after.
open, yes,
So,
it said open a
workshop
document
goals.
that exists already.
Tonight we'll discuss
I'm gonna
common
go
types
look
of
at Pilcrows in
insurance,
there and
the
see what they
purpose of
explain in a
insurance,
couple of things.
and the impact of the
So
COVID-19
make sure you have
pandemic
saved
on
the latest version of
insurance.
this document so
We'll
far.
identify and describe the key
And then
players in
let's
the
go
insurance
open a
industry.
document from
We'll
things that we
conduct an
downloaded.
overview of the risk of loss each of
So you can
us
leave this document
faces,
open.
along
What
with
I'd
the
like you to
types of
just watch here,
insurance
I'm going to
that
go up and
help
click on the
protect
File tab to
against
go to
those
that
losses.
backstage view.
We'll discuss
In here,
ways
I'm
to
going to tell
determine
it
the
I want
types
a
of
new
insurance
document. I
you
want to
need.
open a document
Keeping
that
in
exists
mind,
already.
insurance
So I'm
needs
gonna
are
click the
unique
Open
to each of
command.
us. We'll
And back
discuss
at
what
that same
individuals
window, this
and
looks very much
families
like my
should
save
consider
window, only
when
now you can see
evaluating insurance
I'm opening the
coverage
document, not
options.
saving it.
And then we'll talk about
And
ways
the
in which you
document I
can
want to
save
open
money
is
on your
onto this
insurance
PC.
costs. I'm
It's
sure
not on
everybody's
the
excited to
cloud.
hear about that.
I'm going to click on
So
this
let's get
PC.
started.
Now, again, that
So the
gives me
common
certain
types of
folders
insurance.
that I've been to recently.
Next
Actually, in the
slide,
My
please.
Documents folder,
We
we
have
haven't actually
property
started anything in
insurance.
My Documents.
So imagine it's freezing
So instead,
temperatures
I would like to be able to get
outside,
out to the
your
desktop.
pipes are poorly
Might be able to
insulated,
find that by scrolling
your
down
pipes
this list
freeze
of places
and
that we
burst,
worked
causing
recently.
water
But I
damage.
can actually make
The
that happen a
first
little
party or
easier. If I
you,
just
the
go down
property
here and click
owner,
on the
can submit a
browse
claim to your insurance
When I
agent
click
or
on
company.
browse, it
Ms.
assumes I
McFadden,
work on my
I'm gonna
Yes.
PC.
have you pause for
And the first
just a
place where I was
moment.
looking is
Sure.
I finished
We
working.
are getting a lot
That's
of
not the place I
background,
was
a lot of
working.
like a
That's
television
not
that's
where I
on.
stored my downloaded files.
Yeah.
I put them in a
Pink Lady
folder
in the
out on my
Sky, can
desktop.
you? Okay, great. Okay, that stopped it. Thank you, everyone, for your patience. Sorry for that distraction. We were getting a lot of noise.
Yes, thank
Okay.
you so much. Appreciate
Yes,
that.
and we want you to be able to appreciate the full presentation. So
Yes.
apologies for that. Okay.
Yes, yes. In this world of technology, anything's bound to happen. So thank you.
You're welcome. And
Yeah.
lady in the sky, can you, here we go. Okay. She's bringing it back for you. So you may continue, Ms. McFadden.
Okay, sure. All right. So general liability, we were talking about that being the next common type of insurance. So imagine snow has fallen, you haven't shoveled. Someone walks in front of your house or your business. They slip, they fall, they sustain injuries. The homeowner or the business owner has the duty to report that incident to your insurance agent or company. So this is a third-party coverage, as you can see. Workers' compensation, employees getting injured during the course of business. This is effectively disability insurance, and it provides cash benefits and or healthcare benefits to the injured employee. We've got auto insurance. The common example is an auto accident causing bodily injury and property damage to you, the owner of the auto, and to third parties in or outside of the covered auto. And then we've got life and health insurance. I think that's pretty much self-explanatory. So let's get into the purpose of insurance. Insurance is one way of managing risk, or you can think about the probability of a loss or a catastrophe happening. When you buy insurance, you're transferring the cost of a potential loss to the insurance company in exchange for a fee known as the insurance premium. The goal of insurance is to reduce financial uncertainty and make accidental losses manageable. Insurance is a form of asset management and protection. For the past 2 years, everybody knows the hot topic has been COVID-19. So let's briefly go over the impact that the COVID-19 pandemic has had on insurance. As a result of the pandemic, there's been a sharp rise in health and life insurance claims, which has caused increases in health and life insurance premiums. The large number of premature deaths is the driver of life insurance premium increases. This will vary from insurance company to insurance company, and it's going to be based on the age profile, lifestyle, and location of the policyholder or the insured. Due to the increase in COVID-19 related hospitalizations and treatment, health insurance claims are up as well. And again, this is what's driving the increased premiums. So I'm sure you know there's ebbs and flows in that. And when there's a decline in COVID infections, claims also decline. So we'll talk about the impact in the property and casualty segments. Due to businesses losing revenue, some businesses being forced to shut down, those insurance policies have lapsed. Over the past 3 quarters, there's been a steady increase in businesses reopening, thank God, which is ultimately great for the economy. The property and casualty industry is still knee-deep in a hard market. For some lines of business, insurance premiums are at an all-time high, and insurance company appetites are conservative. This simply means that there may not be a ton of insurance companies competing for your property and casualty business, but expect premium increases from some of the ones that are. Later on, Garland of the Boyd Agency will discuss ways to help keep your insurance costs down. Let's spend a little bit of time demystifying who's who by going over the key players in the insurance industry. So you have the insurance company, or sometimes you hear insurance carrier, synonymous. The insurance company promises to pay for losses or claims that are covered in your insurance policy. Essentially, an insurance carrier's role is to make you whole following a loss or a claim. So examples of an insurance company would be Allstate or AIG or Chubb, and the list goes on. Now, an insured is a person or organization. They're listed on and covered by the insurance policy. The insured is who the insurance company or the carrier makes a promise to pay to. And so you could have an example like Tom Jones or TJ Maxx or ABC Corporation. Those would be examples of insureds. The next key player would be retail brokers and agents. Those businesses have a direct relationship with the insurance company, as well as the person, so Tom Jones, or organization, so TJ Maxx, and those, whether it's a person or organization, it's still the insured, and those insureds are in need of insurance coverage. Often the insurance company will only work with appointed insurance agents and brokers. Those brokers then work with Tom Jones, the individual, or ABC Corporation or TJ Maxx, the organization. They work with those insureds to gain an understanding of their insurance needs in order to approach the insurance company or carrier for an insurance quote. Some insurance agents and brokers are granted authority by the insurance carrier to offer insurance quotes and policies on their behalf. An example of that is the Boyd Agency, a captive Allstate agency. And captive meaning the Boyd Agency has the authority to provide insurance on behalf of its parent company, Allstate Insurance. So you're dealing with a decision maker. Other insurance intermediaries are wholesale agents and brokers. And then sometimes you'll hear managing general agents. These are all intermediaries. They have direct business relationships with insurance companies. So we'll use an example, AIG. They also have a direct business relationship with retail insurance brokers and agents. Again, the Boyd Agency being the example that we're going to continue to use. At times, the wholesale agents and brokers are utilized on what we call hard to place insureds or hard to place businesses. An example of an insured, it would be an insured with lots of claims. A hard to place insured would be someone, or a organization that's just had a lot of claims, a lot of slip and falls, a history of slip and falls, or water damage or smoke damage, you name it. Another example of a hard to place business would be like a dynamite factory. So we all know, think about dynamite factory, that's high risk. So a lot of times, you have to turn to the wholesale market to place insurance for that type of business. Now, wholesale agents, and then there's managing general agents. Managing general agents are slightly different from wholesale agents and brokers in that managing general agents, they identify a void in the marketplace. An example of a void or example would be many insurance companies are not equipped to properly insure brownstone buildings. As you know, some brownstones have landmark status. In the event of a loss to a brownstone, let's just say a fire, it's critical that the insurance company be willing to cover building materials that are needed to meet the guidelines set forth by the Landmark Commission. And this could be pre-war materials that are in need of being replaced. Getting an insurance company to replace these materials can be a challenge. To solve for this, a managing general agent would gather a good deal of data that supports why it's profitable to insure a brownstone. And they'll present a case that would show that, we could quote or insure brownstones competitively and again, profitably. They would present a case and convince the insurance company to allow them to act on the insurance company's behalf and allow them to launch a niche insurance product into the marketplace that would be specific to brownstone owners. An example of a managing general agent is the company that I am employed with, and that is Distinguished Programs. All right, so pink ladies in the sky, are we now prepared to launch a few poll questions to test everyone's knowledge and reinforce what I've covered?
Yes, I'll go right ahead and launch.
Thank you. Okay, so poll question number 1. What is the purpose of insurance? A form of asset protection, a form of managing risk, and insurance companies promise to pay in the event of a loss, or all of the above? That's question number 1. We've got question number 2. Is it always the case that insureds work directly with the insurance carrier? Yes or no? All right, question number 3. Which is an example of a retail insurance agent or broker? AIG, the Boyd Agency, Distinguished Programs, or the TJX companies? All right. And question number 4, which best describes, let's see, my computer's skipping, which best describes the insurance, your insurance needs? Would it be homeowners, auto, business insurance, life insurance, health, or all of the above? So let's see, Pink Ladies in the Sky, how much time does everyone have to answer those polling questions?
Let's give a minute.
Okay.
Only 3% participated.
Oh, wow. Wow. Come on, guys.
A little shy about tests.
Yeah. Take a stab at it. Is everyone seeing? Oh, we're seeing the poll disappeared. Oh, a lot of people are saying the poll disappeared. Can we launch it again, or?
Pink Lady Juliet, can we launch again?
Sure, I'm gonna have to stop sharing.
Okay.
Oh, someone said they answered, but it disappeared. Let's see. Okay, 28%.
Are you seeing? Okay.
Yeah, 37%. The number's climbing. 46%. All right, looks like we're rolling. Oh, great. We've got some great news in the chat that everyone's seeing the questions. If you're only seeing questions 1 through 3, try to scroll down and see if you see the 4th question, maybe. That's what I had to do. Oh, great. Great, so we're at 69%. It looks like it's not moving. I mean, oh, it's moving now, 72%. All right, great. Thank you so much, everyone. All right, I think that's great. I mean, 72% participated, so it looks like it stopped there. We can, oh, it's moving again. As soon as I talk, it starts moving. So maybe I'll keep talking. All right, 81%. Yeah.
Okay, I think we're at we're there.
There, okay. We can close it down and show the results.
So it's 81% that participated. So I'm going to end the poll. And
Okay.
there you go, the results.
Okay. All right. Yeah. Okay. So we 1 and 2 majority got it right, and then example of a retail insurance agent. That's the part that where Garland comes in. He's got to work on you guys, because the answer is the Boyd agency to number 3, which is an example of a retail insurance broker. That is Garland, the Boyd agency. So, and then thanks for sharing number 4 in terms of your specific insurance needs. We appreciate you sharing that information. So thanks, Garland. Over to you.
Thank you, Renee. And before I begin, I just want to thank the ladies of Alpha Kappa Alpha Sorority, the EPIO chapter, for inviting me this evening to be a co-presenter. And I'm looking forward to, again, as Renee did, we're going to make this an exciting event, because I know insurance can sometimes sound or be very boring, but we're going to try to make this a very exciting event tonight. My first screen, in my attempt to make this exciting, first screen is want everybody to basically first just admire one of the greatest teams that there are in football, and that is the New York Giants. We've been rebuilding, we've been trying to get a little bit better, but before we arrived where we are today, we kind of looked like this picture here, where we had the gentleman who's standing there with the number 10 with his hands up in the air. His name was Eli Manning, and Eli Manning was bringing things under control. He was the quarterback for the team. And as you know, with Eli, they won 2 Super Bowls. So we're going to talk a little bit about this picture, because this picture pretty much defines what insurance is really all about. And when we look at this, earlier, what was read was my bio, which was pretty lengthy. And I occasionally, I do send my bio in for various things that I do. And I find that sometimes with the bio, I often have to redo it or revamp it. And at the beginning of the presentation, it said we did read the bio. Now, as I listened to my bio, I talked about, again, went to St. John's University, for all those who went to St. John's, and all the way to where we are today, where I am, as 2022, working, or at the Boyd agency, working for this ogre of a boss named Garland Boyd. He's an ogre, but he's there, he's an ogre, but working at the Boyd agency. But we've gone through from 1986, from being at St. John's to now where I am today. And when I often listen to my bio, I have to be astute to the fact that in 1986, when I look at when I graduated from St. John's University, 1986 Garland was a total different person than 2022 Garland is today. 1986 Garland was living at home. He pretty much just graduated. He was getting ready to get into another job. Living at home with my parents. I was young, dumb, without a care in the world. Basically, I had one asset, only one asset at that time, which was my 1986 Honda Prelude SI. I saw Lenora Gerald on the line there, and I know Lenora remembers my black Honda Prelude that I had all skirted out, but that was my pride. That was it. 1986 Garland had a future and plenty of potential. He saw the world completely differently. Now, 2022 Garland has a future and still has a potential. However, it looks a lot different than it did in 1986. The future 1986 Garland was looking towards is a lot different than the future that 2022 Garland is looking at. 2022 Garland has achieved many of his goals, and 2022 Garland is in a different stage of his life, which is kind of with coming down to the football picture here. We just wrapped up and went through the Super Bowl, right? We went through the Super Bowl. Unfortunately, the Giants weren't there. The Rams, the LA Rams won, for all of our LA fans that are out there. So for a moment, I just want to talk about that Super Bowl and talk about what had happened in the Super Bowl. So when we look at how the game starts, the game of football starts, in the beginning, in the first quarter, maybe first half, you'll take a lot of chances. You'll do a lot of things in order to try to get points on the board and in order to try to win the game. All right, so you'll take a lot of chances. But as you go on into the game and you get into a different stage within the game, into the third quarter or in the fourth quarter, if you got the lead, then you're not going to do a lot of risky things. You're not going to do risky things like throwing a Hail Mary pass if you're up, because then you'll turn the ball over to the other team and they'll be able to score and possibly come back and you end up losing the game. All right. You're not going to put it in the hands of a running back or somebody who's going to fumble the ball and create a turnover, because again, it's going to get you in a position where you can lose the game. So what do we do in the football game when we're up, we've got the lead, and we're trying to win? We want to run out the clock while we have the lead. So what does all that have to do with insurance? What does that have to do with insurance? Well, some of the takeaways from this are, from that particular example, is that if the former you, all right, if the 1986 Garland has the same insurance coverage in place as the 2022 Garland, or let me say the 1986, the 1976, the 1996 you has the same insurance coverage in place as the 2022 you, then there's a potential problem that requires some attention. And we're going to talk about that as we move on. I want to ask you to think about, again, we're talking about football and we're talking about the first, second, third, and fourth quarter. What quarter are you in of your life? Where are you at? Are you starting out first quarter, second quarter? Are you at the halftime celebration? Now, many of us think 50 years old is the halftime celebration. I want to break it to all our 50 and older. You're really in the third quarter. You're really in the third quarter. All right. So where are you at in your life? Where are you at? What quarter are you in? And are you executing the right risk strategy? Are you being very risky? Are you have the right protection in place? What is your strategy for the quarter that you're in? Are you holding the lead, or are you holding the lead that you've gained in life, or are you taking some unnecessary chances that you really don't need to take? And the last question I have for you that we're going to address tonight, hopefully we can all have an answer for it, is, are you protecting the quarterback? All right. Are you protecting the quarterback? And that quarterback, we can go to the next screen. The quarterback in life, and the quarterback in everything that you do, is you and your family. You and your family are the quarterback. And if we look at this slide for a moment, you and your family are the quarterback, and all of the different types of risks that are out there are the defense that's trying to tackle you. All of those things, such as retirement, automobile, every time you get in a car, your home, umbrella, life, long-term care. These are all things, and we're going to talk about some others other than that, are things that can tackle you and take you out. Just like in football, when you get tackled, now in football, you get tackled, and now when the quarterbacks get tackled, they'll throw a flag. Oh, it was a bad play or what have you, and we can do the play over. That's not how it is in life. In life, when you get tackled by, and I'm going to call him Mayhem, when Mayhem tackles you, there's no flag that's going to be thrown. There's no let's do it over. There's no, okay, let's start over in first down again. No, it's you pretty much, that's it. You've got to deal with what you're being dealt. So when we look at many of the defensive players in football, there's one that stands out in mind. His name is Lawrence Taylor. What he did, many quarterbacks, he ended many of their careers. Mayhem, just like Lawrence Taylor, Mayhem can end a lot of our asset building, a lot of the things that we've accumulated can end you in just one tackle, just one time that you haven't planned or put the right protection or strategy in place can take you out, and your recovery, and many of us don't have the time to recover from this all over again. Now, there are there are a lot of different varieties of insurance that are available out there, and for all of these different risks that are out there. So let's talk about some of the risks that are out there that face all of us. One, I want to talk about retirement. Retirement is a big risk. Well, how is retirement a risk, you might ask? Well, living too long. If we look at some of the statistics that are happening today, we look at the statistics, people are living longer. Have you put enough money aside that you can do all the things that you plan to do in your later years? Well, what does that have to do with insurance? Well, there are insurance products that assist with retirement, such as annuities, all right? So those are things that, also variable life insurance, all those are things that you can use in order to put aside for retirement. So retirement is something, if you haven't planned right, again, you had first, second, third quarter, now you're in the fourth quarter of life, you haven't planned for retirement, it could take you out, all right? We're gonna talk about auto insurance. Every time you get in a car, it's a opportunity or it's a risk that you take. You can damage somebody else's property. If you don't have enough insurance, that is now on you. You can hit somebody who happens to be a doctor and now they can't operate anymore. That is now something that they are going to sue you if you don't have enough coverage. Now everything that you've accumulated has now been lost. All right, home insurance. Again, home insurance. If you don't have the proper home insurance in place, you can have a loss in your home, a fire. If it has not been properly evaluated, knowing exactly what the replacement cost is on that particular home, now in the event of a loss, that the insurance company is not going to say, well, you know, we didn't calculate that correctly. That is going to be money that's out of your pocket. Additionally, you can also have somebody fall down on your property, hurt themselves. All kind of things can happen where if you don't have enough coverage or if the coverage has not been reviewed with you, then those are risks, again, that can take you out. Umbrella policies. Umbrella policies are what is called excess liability. We could talk about that more later on. For if you have accumulated, may have people on the line who have several homes, you may have a business, you have lots of assets that you want to protect. Guess what? You're a target. You're a target. You're the individual that somebody really wants to come after, because if you have these assets and you injure someone, you hurt someone, the home that you have in New York, the one in Florida, the one that you have somewhere else on the West Coast, your business, all those things are now up for grabs in the event you injured someone to the degree that your homeowner or your automobile insurance doesn't have sufficient coverage in order to pay that person for their pain and suffering. All right. The other one, disability. Disability. Many people that don't really plan for disability, but disability is really something that can really take you out. And we'll talk a little bit more about disability. Some of the things as far as with disability, all my ladies on the call, pregnancy, you're out of work for a certain period of time. And with disability, if you have the right disability insurance in place, that can assist in the event you're disabled for a specific period of time. Many people suffer from sometimes some musculoskeletal issues. You can have a back issue, a back disc out of your back, or a misplaced disc, or what have you. These things can now prevent you from working in the capacity that you were working in the past, and now you can't work anymore. Now you have to stop working. If you don't have the proper disability insurance in place, there's nothing in place to supplement that income that is now no longer there. All right, life insurance, pretty obvious one. I often ask the question to many people is, if you had a machine that was in your backyard, and in your backyard, that machine was just printing money, 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 $80,000, $90,000, $100,000 a year. It was just printing, printing, printing. Would you insure that machine to make sure it didn't stop printing money? Of course you would. Of course you would, because the moment it stops printing money, it's broke. That's it. You got to do something to figure out where to print that money. You have to go buy another one. Or, and sometimes it's not the same, whatever. You can't replace it. So the only thing you can do is to make sure you insure it. So if you insure that machine, then we know it'll continue to print that money, or it can be replaced and that same amount of money will be printing. Well, that's what we are. Each and every one of us are machines. We generate income. So if you think of each and every one of us, all of us are those machines that are printing money. We want to make sure, God forbid, you go into a purchase of a home, or you go into a business with someone, and the two of you have now invested together on that business, or you've invested in order to purchase a home. One or two of you are removed out of the equation. You went into that with 3 incomes. Now you have 2. Have we planned for that? That's what life insurance helps to do. All right. So, and we can talk about, and we'll entertain questions more about life insurance. Long-term care. Long-term care. Now, many times we enter into the 3rd and 4th quarter of life, but we haven't planned for long-term care. We haven't planned for the unfortunate circumstances of where we may need that type of care. Someone who's today turning 65 years old has almost a 70% chance of needing some type of long-term care or some type of long-term care services or supports. Women, when they need long-term care, they typically need long-term care longer than men. Why? Because we end up kicking the bucket a lot earlier. All right. Ladies live a lot longer. We live a little bit shorter. So when we look at it, 1/3 of today's 65-year-olds may never need long-term care, but 20% will need it for longer than 5 years. All right. So again, many people sometimes don't plan for that, but long-term care is something that we do need to plan for. Other things that are on this that can take you out, you and your family, if you don't have, many people have some investment properties. I don't know how many people on the line have investment properties. Having the proper landlord package policy in place, all right? Not a homeowner's insurance policy, but a landlord package policy. Because in the event you have a loss to that landlord or to that home that you have invested in. With a homeowner's insurance, if you have regular homeowner's insurance on it, now the people who you've been renting that house to can no longer live in the home because the house has had a fire, you will not receive any loss of rental while that person is can't live there anymore because you don't have the proper insurance in place. So again, it's having the proper insurance for the proper risk. Landlord package policy does pay for lost rentals if the persons can't live in your home while the home is being repaired. Renter's insurance. I have so many people, I don't need renter's insurance because I really don't have anything. Again, if something happens we just witnessed, if we turned on the news in the Bronx, that unfortunate fire that killed all those people that were in the apartments. Yes, we can't bring anybody back. However, many of the people that were in those apartments are now displaced because they can't go anywhere. What renters insurance will do is pay for you to live elsewhere until the apartment is made livable again. What great, one of the greatest features that there are of renters insurance. So you can replace some of your stuff that you lost, as well as now you don't have this out-of-pocket expense to have to find and go live somewhere else, where it's difficult to find a place to live, where now all of a sudden you have 30 or 40, 50, 60 people, families that are now all vying to find somewhere to live. All right. So again, it's something to help you with. Co-op, condo insurance. Again, all that is necessary. And if you have a business, you have to have the right commercial insurance in place. Making sure that if we have any Uber drivers that are on the line, making sure that we have the right coverage in place. You should not be driving with your personal automobile insurance. But we can, if you have any questions on that, we'll entertain all those questions at the end as well. We can go to the next slide. Now, with having these things in place, you could go back. Having the proper insurance strategies in place will give you, I was trying to, on this screen here, I guess it didn't come out here, is trying to put a shield around you and your family. But the goal here is you want to put a shield around you and your family. And what is the shield? The shield is the proper insurance strategy that will give you and your family a force of protection from the risks that you face every day. Because the American dream is the acquisition of appreciating property. I know that the Declaration of Independence, one of the things, I'm sorry, the Constitution, basically, in the Declaration basically said was the pursuit of happiness, but it wasn't always the pursuit. It wasn't originally supposed to be the pursuit of happiness. It was supposed to be the pursuit of property. All right, that's the American dream. It's the pursuit of property, and as we look at history and look at basically how we were promised 40 acres and a mule, you'll see the importance of property where we were never given that promise. But that's the American dream, which is the appreciation and acquisition of appreciating property. So when you have acquired or attained that property, we have to make sure that we can preserve and pass it on to the next generation. So many times insurance is really not about you, it's about the next generation, of preserving so that the next generation doesn't have to struggle. The next generation has a leg up, all right? Insurance is often treated as the pariah at the party, all right? It's the thing that we really don't like to talk about, or it's insurance we really don't want to pay for. Because just the definition of insurance alone is sometimes can make you a little upset. When we listen to the definition of insurance, it's a practice of arrangement by which a company or government agency provides a guarantee of compensation for specified loss, damage, illness, or death in return for a payment of premium. All right, for a payment of premium. And sometimes it's that payment of premium that why? Why do I have to pay that premium? Why do I have to pay that premium? Because if any of us have seen Chris Rock do his performance, he gave a funny routine and he talked about insurance, and he said he calls it just in case blankety blank happens. All right, that's what insurance is. And many times, sometimes for a lot of people, nothing happens. So we try to justify or try to say, well, why am I paying these premiums if nothing is happening? All right, I should get something for all the premiums that I'm paying. Well, I would say this to you: if nothing is happening to you, if nothing has happened, be thankful. Truly, be thankful. There's a lot of people, I can give you a lot of phone numbers for a lot of folks and a lot of people who've gone through a lot of things that If they could trade it and not have anything happen, it would be a wonderful thing for them. We can just go to the next slide. The couple of things for when you are looking for insurance, and there are so many options that are out there. There are so many companies that are out there. There are so many, as Renee had described before, you have what's called agents and we have brokers. Basically, the main difference between the two, an agent represents a company. And for example, I represent Allstate Insurance Company, where a broker represents, or really doesn't represent a company, but they have relationships with multiple insurance companies. All right. So again, what you would want to do if you're dealing with any agency is basically to do some research on that agency. Because we're just going to talk about briefly some of the signs of a great agency. One of the signs is they should be problem solvers. All right, an agency that solves problems by talking to you and assessing what your needs are. They should be doing something called fact finding with you, determining what you have, what your assets are. Someone who's just giving you coverage, saying to you, for example, if somebody is doing life insurance with you and they say to you, well, you need $250,000 in life insurance. Okay, sign right here. Well, how did you come to that conclusion? How do you know what I have? How do you know where? So they should be doing fact finding with you. They should be asking you some personal questions. Don't get offended by the questions that they're asking. It's like going to the doctor. You go to the doctor and you have a issue or a complaint, or you have this problem. The doctor's not just going to look at what you specify or what you say the problem is. They're going to ask you some other things. They're going to ask you some other questions. They're going to check your heart rate. They're going to do all other kind of check your pulse. They're going to see whether or not all different things that they're going to look at in order to come to a diagnosis of what your issue is. So work with the agent or the agency and when they do fact finding with you, because they're asking you some valid questions in order to give you the proper coverage. Great agencies should be brutally honest with you. And you want them to tell you what you need to hear, not what you want to hear. A lot of times we want to hear one thing, but a real good agent is going to tell you what you need to hear and not what you want to hear. All right. You also want to look for an agent who's a good listener, a great communicator. All right. You need a great agent is one who is responsive, all right, responsive to, and you're able to interact with them. A couple of questions you want to ask of the agent that you're with or with the company. Some people bypass an agent or they go directly to a company without having an agent involved. And we'll talk about that in a moment. But questions I have is, does that agent or does that company, do they get back to you when you have a claim? Are you calling a 1-800 number and now you really don't have a direct person to deal with? You don't have someone who's on your side. So it's basically the company and now little you with no one who's on your side. Does the agent have multiple ways to contact them? All right. Can you contact them by text, by email, by phone? Right? Do you have multiple ways that you can deal with them? When you refer them, do they send thank you cards or emails when you refer friends and family? Does your agent contact you regularly throughout the year? Or do they contact you every 3 or 4 or 5 years where they should be doing some type of review with you? Because guess what? Things change. We just opened up at the beginning of the presentation. 1986 Garland should not have the same insurance as 2022 Garland. So I should have some type of a good agent who should be reaching out to me, asking me some questions. Hey, what's happened in your life? What's going on? Have you had a child? Have you had any kids? Have kids left the house now? All those things that they should be talking to you about, doing some fact finding in order to give you the proper coverage and give you the proper insurance advice that you need. The companies that are out there right now, basically when you're doing it on your own, they're not going to reach out and do that to you because you have to do that yourself. All right. So again, you want to basically work with someone, especially if you have a lot of things to protect and you have, and again, you are looking to give these things to your next generation and properly protect yourself. You should have someone to give you some proper insurance advice, because one mistake and you'll be starting all over again. All right. Also, you want to go on that website, or that agency has a website, and see what are their clients saying about them. All right. The good and the bad. Do some reviews, see what those people are saying about that particular agent. All right. We can go to the next slide. So some of the things that I know we all want to hear. Well, what are some of the ways that we can reduce the cost of insurance? What are some of the things that I can do? Well, let's talk about life insurance for a moment. One, with life insurance, like anything, with life insurance, get it while you're young and healthy. I can't be any more clear. I can't be any more precise and to the point on that. If you're young and you're healthy, you should be getting life insurance right now. And let's clear another thing up. Some people may say, well, you know what? I have life insurance and I have it through my job. All right. Well, COVID has taught us one thing, is that we don't always have a job. And guess what? Some of us are going to retire from those jobs. And when you do, and if you lose the job, leave the job, or retire from that job, guess what? Your life insurance stops as well. You should have your own life insurance in place. Most group plans that come through businesses or companies usually don't give you that much. They usually give you maybe 1.5 times your salary, and that's it. If you just purchased a $450,000 home and your mortgage is $400,000, 1.5 times your salary, if you pass away, is not going to cut it. It's that simple. All right. So life insurance, get it while you're young, get it while you're healthy. Don't get it while I like to use the analogies. You don't want to get that old car. You don't want to be that old car that's got 75,000 miles on it. All right. And it needs an oil change. An oil change meaning that, you got some, you got high blood pressure, cholesterol issues, all that. All right. Because it's going to cost you more. So if you're in great shape, get it now. Now, if you have those issues and you do have high blood pressure or whatever the situation is, if you have it under control, it's not as expensive as you think it is. All right. It's expensive for the folks who do not have it under control, who don't go to the doctor on a regular basis. If that does come up in the medical, then that is something that will be addressed. But there's all kind of life insurance that's available out there. But again, the key: get it while you're young, get it while you're healthy. If you don't have it, get it, and make sure you have insurance outside of your job, not just with your job. Long-term care insurance. Long-term care. If you plan on living, long-term care insurance. We all need that. All right. You definitely need long-term care insurance. All right. Because now someone may say, well, you know what? What if, I never used the long-term care? What if I lived long enough and I don't have any issues or any problems that happened to me that put me into a long-term care facility or anything like that? Well, what about that? Great. There are long-term care products that are available for you where in the event there is no long-term care claim, where the premiums that were paid in will be paid to the beneficiary. So those products are available. Also, big thing, tax deductibility. The state wants you to get long-term care because they do not want to take care of you. Because your only option, if you do need long-term care services and it needs to be paid for, and you don't have that care, is something called Medicaid. And in order to qualify for Medicaid, you basically have to spin down or have like zero assets in order to be qualified for Medicaid. And it's so if you have any assets that are out there, you own homes and things of that nature, you're not going to qualify for Medicaid. And many times what some families try to do, they try to change things over into, you know, their kids' names and all kind of things that go on. And sometimes that can backfire on you because there is a look back period where Medicaid does look back to see if those things have happened, you know, because they know that people do this, and you will be denied any Medicaid. So it's good to have long-term care coverage in place. And as I said, there is deductibility. It's as far as from the state is concerned. If you're 40 or less, it's a $450 maximum tax deduction based on the premiums that you're paying. If you're 40, between 40 and 50, it's an $850 tax deduction. If you're between 50 and 60, it's a $1,690 tax deduction. If you're between the ages of 60 and 70, it's a $4,520 tax deduction. And if you're more than 70, it's a $5,640 tax deduction. And again, that is up for the premiums that you're paying towards long-term care. All right. So again, that's a commercial for long-term care. Clean up your credit if it is bad. If your credit is bad, clean it up. Many, Allstate being one, many insurance companies look at your credit or do some type of a credit look to determine, which is could be one aspect of determining your homeowners, automobile, landlord package policies, most of your property insurance policies. They use some form of looking at your credit. Allstate doesn't use totally credit, but they use an algorithm that takes a snapshot of your credit. So again, clean it up. Sometimes there's things that are on your credit report that may not belong there. I can speak, number one, I had that situation when my dad passed away in 1990. Basically, he and I, my middle name is Howard, his first name was Howard. Somehow things from his credit report ended up on mine. All you got to do, you call, you basically get a copy of your credit report, you look at these things. If they don't belong, you write a letter, and they have 30 days in order to remove it or not, or justify it. Those things can be, some things may be on your credit report that don't belong. Get them off, clean it up so that your credit can be good, and then you can get a better rate. All right. Don't jump around from company to company. And many of these blogs that are out there say, oh, you know what, every 6 months, you ought to go and jump around, switch companies. No, because you're losing rewards that you would be earning from companies that would give you for staying with them. They give you discounts or for being with a company for a long period of time. So you can jump around from company to company, but it does work against you also when you're looking to get insurance. For example, Allstate is one that looks at the amount of time that you've been with your prior company. If they see that you're someone, and it's obvious because they'll do what's called a claimant carrier database look back, and they see that you've been with this company for only a short period of time, you are not put into the best tier. They reward people who have loyalty. All right, so jumping from company to company, it works against you. All right, consider higher deductibles. All right, especially if you have an older car. It's something you may want to do is consider a higher deductible, taking more of that risk on yourself. And what I always tell my clients, if you're going to take a higher deductible, the money that you're saving, you want to set it aside so that it now equals the amount of the extra deductible that you've now taken on, so that in the event something happens, it's no big deal. you've already planned for that to happen, and you can basically pay that deductible or that amount that you're responsible for and have the insurance company pay the rest. Pay in full if you have the opportunity to do that, all right? If there's a pay in full discount, many insurance companies will lower or give you a discount for paying the premiums in full. Multi-policy discounts. Can't tell you how many clients, for whatever reason, they have their auto here, their home in this company, they have this over there. If you put all of your insurance together, your home, your auto, your landlords, your life insurance, everything together with one company, you get multi-policy discounts, all right? I'd love for you to put it all together with Allstate, all right? So multi-policy discounts. And again, the last one, maximize on those discounts. One of the things that what you should be doing at renewals is touching base with your agent, all right? Having them review the discounts. Some discounts may have dropped off. Many times people say, oh, my rate went up. You know why? Because maybe you lost the discount. Maybe you had a defensive driving course that you took 3 years ago and you got a notification in the mail and life got busy. I didn't take it because of COVID, I forgot. And now your premium went up. Now you want to yell at the company, why did my premium go up? But it's because maybe that discount came off. So at your renewal, 30 days before, 45 days before, give your agent a call, talk to them. Hey, let's review the policies, make sure I'm getting all the discounts that I'm entitled to, see what other discounts that are available for you out there. And the last one I'm going to put out there is there is state approved defensive driving course. Because of COVID, many places are not doing face-to-face defensive driving courses right now because of COVID. Some are opening back up. However, you can save up to 10% on your insurance for up to 3 years, all right? Let's do the math. If you do have an automobile policy, you're paying $1,000 every 6 months, all right? 6 months times 2, right? That's $2,000 a year, right? So 10% of what? $200. 200 times 3, that's $600. That's $600 you saved right there, all right? Just for taking a defensive driving course, all right? And right now, the way banking is right now, you can't put the money that you would pay to do a defensive driving course into the bank and get that much interest on it. So again, defensive driving course, all right? And you can go to boydagencyinc.com. If you have not taken a defensive driving course, you can go there and you can use the discount code, which is BAD Drive Safe, capital B, capital A, capital D, lowercase RIVESAFE, to get a $10 off the cost of the class. All right. So that is all the ways to reduce costs in insurance. And this is my contact information. Boyd Agency. I'm located 22209 Jamaica Avenue in the beautiful town of Queens Village, New York. And my phone number is 718-264-2900. And you have there my email address. You can feel free to email me if you ever have any questions. That is my next www.boydagencyinc.com is my website. Also, you can text GBOYD1 to 36260, and you'll get my digital business card. So with my digital business card, there's some wonderful things that you get when you get my digital business card. When you download my digital business card onto your phone and you save the homepage, you can contact me through it. You can refer me. You can access my agency website. If you are part of Allstate, you can go to your allstate.com account. You can also download the mobile app from there. You can request a quote. You can get insurance education. Everything that I'm talking to you and more is all on this, on that digital business card. It'll take you through milestones in life where you can calculate what it would cost for life insurance. You can calculate monthly car payments if you're looking to buy a car, buying versus leasing. All of that information is out there on that digital card. Renting, if you're thinking about buying a home, renting versus owning. All right, you can do some calculations and you can do that on that digital business card. All right, on that digital business card. Also, if you're looking to refinance your mortgage, there's a refi calculator. How many of us go out to Google and we're looking for, I need a refi calculator? You can get it right on my digital card. All of that is out there. All right. How much should you be saving for your kids for college? You want to calculate that? It's right out there on my digital card. We tried to think of it all for you out there. All right. So you can text GBOYD1 to 36260 and you'll get my digital card. And for today going forward, if you have your phone, feel free to snap a shot of that QR code. And if you snap a shot of that QR code and you request a quote on auto or home insurance or auto and home insurance, the Boyd agency, because he loves those AKAs so much that he married one, so much that I'll tell you at another time, but I also am related to one of the incorporators, but that's a story for another time. But the Boyd agency will donate $10 to the Pearls and Ivy Foundation for each auto and property insurance quote that's generated from this workshop. So you can snap onto that QR code. And again, we'll be glad to give you a quote for your auto or for your home. Now, there are some caveats. Now, each auto insurance quote request must have current auto insurance for at least 6 months. So you need to have at least 6 months of insurance. You have to be licensed to drive for at least 3 years. Not have any major accidents or violations in the last 3 years. So no DWIs, we can't have those. You have to reside in New York, all right, because everything is here in New York. So if you're in Montauk to Albany to Buffalo, we can quote you anywhere in the state of New York, all righty? And you're not currently insured with Allstate, all right? Because if you're asking for a quote and you're already insured with Allstate, it's going to be the same thing, all right? However, if you do have Allstate, you give me a call. I can review your policy. If you're not, I'm not your agent. We can see, make sure the agent is doing the right thing for you, but don't request a quote. I can review your policy with you. For property insurance quotes, you must either be purchasing or own the property, and it has to be in New York State. Once again, anywhere from Montauk to Albany. And again, feel free to take a snapshot of that QR code. You can save it. You may not be doing it right now, but you can do it later on. Just make sure you get a snapshot of it. I think I have some poll questions to see if people got all this information that was thrown out. Are we ready for the poll questions?
Yeah, they are.
All right. First poll question. What strategies can one implement to protect the quarterback, AKA, no pun intended, me and my family? Second question. A great agency will tell me what I want to hear instead of what I need to hear. True or false? And third question, what are the signs of a great insurance agency? All right, we're halfway there. All right, we're at 69%. We're almost there. All right, we got 76% participating. We're gonna do a little countdown. We got say about 15 more seconds.
15 seconds it is.
Seven, 6, 5, 4, 3, 2, 1. Pencils down. I always wanted to say that.
Results are in.
All right.
How did we do?
Let's see.
Are you not seeing? We're at 84%, 84% participants.
Mm-hmm.
Yeah, so Garland, you want to read the results and just kind of,
Okay. All right. So we had question number 1 was what strategies can one implement to protect the quarterback, which is me and my family. And I'm glad nobody said wing it. All right. I'm glad no one said set up any GoFundMe accounts, although, you know, you can look on Facebook and see those out there. All right. So the answers were access the risk I face and prioritize implementing the insurance products that I need, access or assess my life value to my family and loved ones that will be left behind. Also take control of my finances to save money for the future in the event I live too long. Great, great, great answers. All right. Next was a great agency will tell me what I want to hear instead of what I need to hear. All right. So that is false. All right. A great agency will tell you what you need to hear, not what you want to hear. All right. And question number 3, what are the signs of a great insurance agency? All right. They should be problem solvers, proactive versus reactive, good listener and communicator. All right. They can be easily contacted, and the agency should have great Google reviews. So they should be all of the above.
awesome.
All right.
Awesome.
Great. That was awesome.
Yeah, well, I will share this. Initially I wasn't going to, and but not to sway anyone, but this is why Garland is me and my family's insurance agent. This is why.
Thank you.
Yeah. All right. So did we get any questions in the chat? Let's see, or do we want to open it up to the audience and have anyone ask any questions live?
Certainly. I will give you one question from the audience, and then we can unmute everyone so that they can ask their questions themselves if there are additional questions. So one question was, what age is a good age to take life insurance policies out for your kids while they are young and healthy? What age is too early?
Garland, do you want to take that?
I definitely will take that. All right.
All right.
That is a great question. Great question. Now, it depends. I would say the answer to that question depends on what the purpose is for the life insurance that you're getting. Unfortunately, I just had a close friend of mine. He lost his daughter in a car accident, and she was 19 years old. So when is too young? when there really is no answer for that. So again, it depends on what the purpose of that life insurance is. Because some situations you can get the life insurance if you're getting either a whole life or some type of variable life insurance product where you're dumping a lot of money into the cash value portion of that particular insurance. That is something that if you start it while they're young, it's relatively inexpensive. So then when they get older, that cash value is now grown on a tax deferred basis. So now when somebody's 21, 23, 24 years old, and you've been dumping the money in there from the time that they were born, then that money can be withdrawn, can be borrowed against if you choose to do that. But there are other options as well. You can also basically do that same thing with some type of investment vehicle as well. But again, it depends on what the purpose is of the life insurance. Sometimes on your own personal life insurance, for example, if you get your own your life insurance, if I got life insurance for myself, there is a rider that you can take on your policy for your child. So you can do that as well. And even if you got, for example, you got that rider, and let's say you had one child at the time, and then 5 years later, you have 2 additional children. Those children are also covered from that one rider that you took. So you don't have to update it every time. And you can take out that rider will cover them up to a maximum of $25,000. You can also, some insurance companies do offer the ability that you can now, once that child reaches the age of 25, where now they can be spun off of your policy as a rider or a children's term rider into their own policy for that 25,000. But again, to answer that question, how young, I would say you want to do it with them as young as possible, because again, we don't know what the future holds. Again, I mean, the worst case scenario is dying before their time, or we don't know whether or not, we can develop some type of a sickness, cancer, or any, some type of diabetes, some type of something that would prevent them later on from getting insurance. So I would say it's never too early to get insurance.
Yeah, Garland, it's interesting you mentioned the investment vehicle. My children are all adults now, and everybody's out of college, with the exception of one. She's got one more semester, and then I'll have, everyone will be out of college. But when they were babies, I did utilize an investment vehicle. I opened up a college savings plan for all of them. And instead of getting life insurance and a college savings plan, I got only college savings plans for them. In the event, God forbid, something may have happened, I could have utilized the funds in the college savings plan the way I would have utilized life insurance payout. So yeah, that is an option. But obviously, they've got life insurance now. And I'm particularly, as you know, not licensed in life and health. I'm licensed in property and casualty. And so I defer to you on that. But I also defer to you on property and casualty, because I think it makes sense. I don't think it makes sense to handle my own insurance, even though I'm in the business. So I appreciate all the help that you've given me.
Thank you. And just another caveat to that also, in talking about our children, sometimes we don't take into consideration, especially when our children graduate and matriculate into college. Sometimes, unfortunately, the way it's set up now, many of our children have these loans that they have to pay back. And many times, some of us, thank God I wasn't, but some of us are co-signers on those loans. Now, what some people have not considered, God forbid, something happens to your child, they pass away, and now that loan has not been paid off or satisfied. If you are a co-signer, the bank or the lending institution is not going to say, we're sorry that, little Johnny passed away. they're going to be looking for the rest of their money. And sometimes that life insurance that you have in place can pay off the balance of those loans if you have enough in the event something like that happens.
Yeah, excellent. Mhm. Yeah, excellent. Any other questions?
So everyone can now unmute themselves if they would like to ask a question. Are there any questions? Okay, I think that we unmuted everyone. Let's see.
Or feel
Well,
free to
if
use the
anyone, okay.
the raise hand feature works as well, right?
Yes, just raise your hand, please, if you have a question.
And if no one has questions, that means that Garland and I did a fantastic job.
I will jump ahead of you and say that
Oh.
you and Garland did a fantastic job. Absolutely. I will jump right ahead and add that. But I do see someone's hand is raised.
Okay.
Michelle Hart, Miss Hart.
Yes, hi. Hello, Garland Boyd. My question for either of you probably can answer the question, because it confuses me. Some people say yes and some people say no. Is it necessary for a single woman without children to have insurance? And then, like, how much would you really need?
Garland, you're on mute.
Sorry about that. Let me answer your question with a question. All right. So if you're single, no children, and let's say no family, what is your desire for how you want your final going away and things to be handled, and what's what's the plan?
Well, I guess I would have the funeral at Mount Moriah, but that's just an aside.
Right.
No, well,
it was kind of rhetorical. I asked that question because the reason why, because sometimes you ask a great question, because there are people, again, who don't have family, they don't have family, sister, brother, children, what have you. However, what still remains is the fact that when somebody passes away, when that person passes away, there's still the issue of their estate. So what you would recommend, you should one, meet with, or basically have an attorney or somebody, especially if you have an estate to leave behind. You want to meet with someone, an attorney or someone who could put together a will for you, where you can leave or have directions of how you want things to be handled when you're gone. Because somebody's got to contact Mount Moriah. Somebody's got to, there's somebody who has to do that. So that could be your best friend, that could be someone who has some type of a financial obligation with you. And that would be the person who you would designate as your beneficiary, and you would have that conversation with them. Basically, also let them know, that you're doing this and that they're going to be what you would like to have done, and that would be their responsibility to basically do your last wishes.
Yeah, and one of the things, hi Michelle. Hey, I think about that as well. And I'm no life insurance expert. That's not my expertise, but I think about, how, charitable we all are. And maybe there's a particular charity
Absolutely.
that you would be interested in donating to, and maybe you take out a life insurance policy and make that charity beneficiary of that life insurance policy. So things like that, and something to think about.
Great question. Can I go now
Great
to
question.
Brenda Marinia has her hand up?
Yes, can you hear me?
Yes.
Yes.
Okay, I don't have a question. I guess I want to reiterate something because I felt it happened to me. Now, I worked for over 50 years and I always carry like 5 times my salary or whatever, all these big life insurance policies. So I never really thought about a personal life insurance policy because I always had insurance. But guess what? When you go out and you're no longer working, guess what happens to the life insurance policy?
It's gone.
It's gone. So when you're talking about getting one, I would almost say to any young person, especially I guess as you have new sorors come in, take out a life insurance policy while you're young and healthy and it's cheap. You won't even miss the money. But further down the line, that life insurance policy, you have all this money and something should happen to you. Your parents may get money, or better yet, if you have kids, they can get the money. But you ever try taking out $100, $200, $500 million policy at 70 years old? So I'm just, saying it, you don't even think about it sometimes when you're young. And because I have a son who's a millennial and he's like, I'm not taking out, I hear that's a waste of money. I'm not putting my money in a life insurance policy. I'm saying, but you spend more than the cost on 2 cups of Starbucks coffee. So you won't even miss it. But when you don't have it and you get older, then you're going to be sorry that you don't, because now that same policy is going to cost you so much. So I just wanted to say that to some people. Keep that maybe in the back of your mind. You may have said it, but I stepped out a minute, so I missed it. But I'm really sorry that I didn't take out a personal life insurance policy, even though I had, all of this money from my job. But when you stop working, that's it.
Yeah,
Right.
and
And
the thing is, we always talk about building generational wealth. Life insurance policies are part of that. I don't know that
Right.
people really realize that, but it's a part of the inheritance. So I think as a community, we should really start to embrace, if we haven't already, purchasing, because that's a part of building generational wealth.
Right. And I think just to go back, I know it was done in jest, but the very beginning of the presentation, we had those top 5 reasons why not to buy life insurance. Many times, unfortunately, it's a selfish reason sometimes why we don't do it. I just have to be honest about it. It's really a selfish reason. But life insurance really isn't, it's not really about you and it's not for you. It's for those that you leave behind, really. But yes, that is what you had mentioned about, again, retiring or leaving your job. Because the unfortunate thing, like you said, now you retire at 65, 70. Now you've got to get life insurance at that age, and it's going to be that much more expensive. And again, there's health and all health issues and what have you. But yours was a testimony that I hope a lot of people heard and basically act accordingly based on what they've heard.
Indeed. I have a few more questions, a few more people who have questions. I'm going to go to Jasmine Chris Johnson.
Hello, good evening, everyone.
Good evening.
My question was, in terms of investing for a child's future, do you recommend like college 529 plans over other custodial accounts?
Okay. Again, what I would say is not to give a broad blanket recommendation. However, just to distinguish the 2 things that you brought up, a custodial account. Custodial account, if you invest in that, unfortunately, for myself, when my daughter was born, 529s weren't out then. So I had no choice. I had to do a custodial account. Now, with a custodial account, unfortunately, basically all of the gains, guess what? You're taxed on them. All right. With a 529 plan, all right, it basically grows on a tax deferred basis. and basically it's taxed once the money is then withdrawn for educational purposes. So that's the differences in the two. And again, depending upon where where you're buying, for what state that 529 plan is from, again, there is some other tax benefits to it if it's from New York or what have you. But again, you want to, if it's a 529 plan, again, that money grows on a tax deferred basis until it's once it starts with being withdrawn for those educational bases or educational funds. And the other caveat to that as well, let's say you have you've done that for little Aquan, who's looks like he was going to do all this, he was going to go to school, and he gets to 18 years old and he tells you, you know what, I'm buying a Harley and I'm riding across country. So what about all this money I put into this 529 plan for Aquan? Well, let's say you decide to go to school. You can use it for yourself for going to school. So there's other benefits to having a 529 plan.
Yeah, I am a fan of the 529. All three of my children had 529 plans. They went to college on their 529 plans. And if there were, like Garland said, if there was money left over from the oldest in his 529, I just changed the beneficiary to the next oldest and kept going. So yeah, I mean, Garland, they still have money in the 529. They're out of school, but it's there because, they're going to go to grad school, or maybe I want to go to school, like Garland said. So I'm a fan.
Thank you so much. I appreciate it.
You're welcome.
Okay, we're going to Tatiana Ferry.
Guys, can you see me?
Yeah.
Yes.
Awesome. Well, first of all, I just wanted to thank you guys for this program. I learned so much today, and honestly, they should teach this in schools because we need to know the stuff. But my question is, and I know you touched on it, Garland, when it comes to something like auto insurance or renter's insurance, I know you said when you get displaced, they put you up somewhere. I always wonder, do they put you up based on the amount of money you have in your insurance, or do they just put you up indefinitely until your situation's back because you have insurance?
Great question. In the event, for example, if you have renter's insurance and let's say your rent that you were paying, let's say you're paying $1,200 a month for rent, what they'll do is to pay up to that amount that you were paying for rent. All right, so it would be comparable to whatever your rent payment is for you to live elsewhere. And again, depending upon the company, for example, for Allstate, it'll be up to 2 years or until such time that you're able to get back into the place that you were, that was, had the fire or had the damage.
Gotcha. Thank you so much.
Wow, these are wonderful questions. I'm so happy everyone's getting what they need tonight. Let's go to Elizabeth Maharaj.
Good evening, everyone. Thank you so much for this very informative program. So I do have two questions. One question, just, I'm beginning to save for my little ones. I'm wondering if having a college saving plan would somehow negatively impact FAFSA if I qualify for that.
Great question. All right. It not negatively, but they will look at that when you do the FAFSA, what you do have saved. However, you have to look at the pros and cons of that, is that I'll speak for myself. My daughter, although hers wasn't a 529, which I wish it was, but started my daughter at when she was born, basically started putting away, started at $50 a month and gradually increased the amount. And praise God, basically with that, we were able to pay for her 4 years at Stony Brook University. So you may not need a FAFSA, but you know what I mean? It's that's my point. You saved enough where you really don't need that assistance. But then, there's also the other opportunity, whereas, your children can get any other type of academic scholarship, or there's other scholarships that are available that are not based on income. But yes, the short answer to that, they do look at all the income, and they do look at what the kids have. Now, again, with the FAFSA also, I believe when FAFSA is being, it's been a while since I've done it, but I think the FAFSA, the child is actually the one that's applying. So it's not the parent. So if the 529 is in the child's name, I believe, yes, they will look at it. But it depends on who's the owner of it, because when the FAFSA was being filled out, it's based on whom the person is. So I believe it was when my daughter did the FAFSA, it was for her, and they were rewarding or awarding her based on her application, not based on the things that I had.
Okay. All right. Thank you.
How
I
old
also
are they,
have
by the way?
my little guys. I have an 8-year-old and a 3-year-old.
Okay, you got way time
Yes,
for
I
that to
do.
figure out the
I have
FAFSA
some
thing.
time to figure it out. Thank you. I do
But
have one more
start
question.
finding out about it now.
Yes, definitely, definitely. So I have term life insurance. I'm seeing that I also need whole life, because the term is like 30 years, and hopefully, I outlive that. But I'm just thinking, like, let's say if I do need Medicaid in my older age, will that be considered an asset, having whole life insurance?
The cash value buildup in the whole life, or the permanent life insurance that you have, yes, if you had to apply for Medicaid, that would be considered as a possible income that you can have. Yes, that would be looked at. However, basically, I mean, it really wouldn't be that. It would be like a blip on the radar compared to all your other assets, which would be your home, your retirement plan, retirement funds, and things of that nature that you have. So yeah, it wouldn't be that. Again, depending upon how much you put into it, if you overfunded it and it was a variable, then it could be a lot. But for the most part, the things that are really going to offset that is going to be the hard assets that you have, which is your home and things of that nature. Now, just to caveat on your term life insurance, now one of the things you would want to do is, depending upon the company that you have with the term life insurance, that is a lot of times what's built into the term is a feature where you can convert all or a portion of that into a permanent life insurance. So that's also something to consider before it runs its term, because you want to take advantage of it, because when you convert, it's going to be converted based on your age. However, whatever you were rated at the time that you took out the insurance, if you were in perfect health, let's say, God forbid, down the road, you develop something or whatever it is, when you convert it, they're not even going to do a medical on you, because they're going to be rated based on when you first got the insurance. So that's the beauty of the conversion. So anybody out there that has term insurance, don't let it just lapse. You want to look into possibly converting it to take advantage of the rating class that you were in at the time that you initially got the insurance.
Thank you so much.
You're welcome.
Wonderful. We have one more question. Oh, maybe two. Okay, let's go to Rachel Walton.
Good evening, everyone, and thank you for a wonderful presentation. I jumped in on the end, but I was happy that I made it tonight. I have one question, and maybe, I don't know if it's unique, but I wanted to know if it was wise to have more than one life insurance policy. I have whole life, and I also have term, in addition to a policy that was open when I was born with another company. Just, understanding, what is too much, or,
Okay. I don't give blanket answers what I would say is this is with life insurance, life insurance should be taken out, or the face amount of the policy should have a purpose and that purpose should be based on the fact finding of what the needs are once you pass away. So what I would suggest doing is you can download my app, and what that would have on that app is a life calculator that'll give you an idea of what your life value is. All of us on this call have a life value, and you can do it pretty simply right now. I mean, everybody has the calculator, pen and paper. What you want to say, look at first is how old are you right now? Okay. And how much longer are you going to be generating income? So let's just for argument's sake, let's say you're 30 years old and you're going to work until you're 65. Okay, so that's 35 years. If my math is correct, right? So 35 years. So let's say for 35 years, if you're making right now $100,000 a year, right? So if you're making $100,000 a year, so that's the machine that's in your backyard that's going to be generating $3.5 million. Okay, so if sometime that machine breaks down and people are depending on that, that's just a life calculator that's out there. Now, what we want to look at from that 3.5, okay, what insurance do you have in place now? Because you want to subtract that, because you already have that in place. What investments do you have in place already? Because you can subtract that from what you need. So right now, if somebody, or if you're in partnership with someone who's depending on that amount of money to be generated, again, this is only up to age 65. That's how you can kind of calculate what your life value is. Now, there are other ways, again, to look at that, but that's pretty much a kind of a nutshell of how you can look at what your life value is.
Okay.
Thank you.
All right, we're going to go to our last two questions of the evening. One is Mr. Coiner.
Say that 10 times fast. Say CK for short.
Yeah, thank you. It's Honest Corner, but you can say CK. I'll answer to it. Not a problem. First of all, thank you, Brother Boyd, for this presentation. You know, I've always got your back, and you know, shameless promotion. He's my insurance guy too, and I've done very well with Brother Boyd in a short amount of time. I just wanted to ask a follow-up question to I think it was Ms. Maharaja's question. When you were answering, you were talking about converting a term policy over to a whole life policy. When is it advisable to do that, right? I have a 30-year term life policy of my own. I believe I've been in for about 13 years now, maybe about 13 years now. And, you know, like you said, you know, the CK of 13 years ago is different than the CK of now. And, you know, situations have changed, assets have grown. You know, when is it a good time to kind of reevaluate that and say, maybe that should be converted into a whole life, or maybe just leave it alone if you're still in great health?
Great question. With the term insurance, well, first I would say recommend before you do all that, you want to take a look at what your overall picture is. As you said, the CK from 5 years ago is not good. And I can say this because I know the CK from 5 years ago is not the CK of today. So again, you want to look at that picture and see where you are now and see. Now, the next question is, well, how does that term insurance I have play into that? Because the term insurance, you may or may not be able to convert all of it. And the term insurance doesn't necessarily have to be converted into whole life. The terminology is can be converted into permanent insurance, because permanent insurance takes on various different types of insurance. There's whole life, there's variable, there's variable, there's all different types of permanent insurance, but it's not just whole life. Whole life is something where it's a fixed rate and it's just consistent from beginning to end. Whereas the other types of fixed products or other types of permanent products can be variable, it can be flexible, whereas you can pay some in, you can stop over a period of time. Unlike with whole life insurance, you have to consistently pay it all the time in order to keep it in force. Whereas with the universal life or something like that, you can pay in, take off a couple of period of 2 or 3 years or things of that nature, and you're not penalized for it. But to get back to your question about the term, when is a good time to convert to term? This is what you have to, and this will factor into your decision, is that with the term life insurance, you have to look at, again, every day or every year you're getting older. So when you do convert that term insurance, it's going to be converted based on your age. However, you'll get the benefit of whatever you were rated at when you first took it out. You're going to have that rating. So for all of my who took out insurance when they were non-smokers, and you all of a sudden took up this thing called smoking, I'm just throwing that out there. The insurance companies, you don't have to say, hey, you know what, I'm a smoker now, or you know what, hey, I've got diabetes now. No, whatever you were rated at that time, that's the rating that you're going to get. However, if you were 25 when you took out the insurance, now that you're 45, you'll be rated at the age that you are now. But whatever your health condition was, that gets carried over. So if you want to consider looking at your age, the breaking points usually are 40, 45, 50, 55. Those are usually the times you want to take a look at it and see whether this, whether it's a financially advantageous for you to do that. But
Excellent.
every year you wait, it is more expensive.
Thank you, Noob.
Thank you for your question. Okay, our final question of the evening, Miss Keverly Mulme.
Oh, you pronounced that correctly. Good evening, everyone. Like she said, my name is Keverly Mulme. I'm not sure if we touched base on this, but I noticed that everyone was focusing on whole life insurance and term life. So just a brief synopsis of myself. I'm 27. I happen to have both whole life and term life insurance, but I also just got accidental coverage, which I think a lot of people don't even know that exists. From what I got from it is in an event of if I was in a car accident and I happened to die, I don't believe that the whole life insurance covers something like that. Is that something you can speak on? I know there's a reason why I got that accidental coverage. Like if you in a car accident and you die, yeah, your life is not gonna carry that for you.
Actually, if you just die, period, life insurance covers you. So now the one of the benefits of having accidental insurance is that you would have that accidental payout on top of the life insurance. However, the caveat is that you would have to die in whatever that specified accident is. So what I used to tell some of my clients is, if you have accidental insurance and you're sick, you want to run out and get hit by a car. No, you're going, go out there and get hit by a car. But yes, but I'm glad you brought that up, because there is another form of accident insurance that's out there. Allstate used to have it through called the Allstate Benefits, but they sell it through and offer it through people's jobs. It's called accident insurance, where it doesn't just pay for a death benefit in the event you're killed in an accident, but in the event, for example, you're you can get a family plan where your child is playing soccer or what have you, and they snap their Achilles or something like that. It'll pay for those not the medical bills, but sometimes there's bills that are outside of medical bills that you encounter. So you have to take off from work and take that child for therapy, or it could be yourself. You got to take yourself for therapy and all these things. So the time that you would miss from work and travel, to transport you back and forth, it does pay for those costs in the medical portion. As far as any treatment, that would be paid through your medical insurance that you have. But that accident would, in event of those type of ligament tear, musculoskeletal breaks, broken arm, broken leg, it'll pay you a face amount just for that, plus pay for a certain amount if you had to go to the hospital. So it's on top of the medical bills that your medical would pay for that, but then there's also a benefit, if you want to call that, for that type of treatment that you would get.
Okay. All right. Okay, so Ms. Mulmay, did you have your question answered?
Yes, ma'am. Thank
Okay.
you.
Very well.
Sorry, I forgot that I'm on mute.
That's okay. Great. So let me see. Do we have any concluding statement from Ms. Peterson McFadden or Mr. Boyd?
Yeah, I want to thank everyone for spending their Wednesday evening with us. Insurance, sometimes people think of it and they think, oh my goodness, they're going to put me to sleep, but it doesn't look like we put you guys to sleep. So I'm thankful for that. If you have any questions whatsoever that come up after this evening, please let us know. You have Garland's information. Feel free to give him a call, and he can assist you. And thanks again, Garland.
Yeah, thank you again. I want to thank the ladies of Alpha Kappa Alpha sorority, the EPIO chapter, for inviting me, and I had a wonderful time. And again, the goal, I hope, of this event this evening was, one, is that we made a very boring topic somewhat exciting, and also that we can take from this workshop and realize that, again, for life insurance, it's not just about us, but it's about the people we leave behind, and also building legacies. That's what this is about. We want to make sure that we are building legacies for the next generation. As the Bible declares, is that a blessed man is one who blesses not just his children, but his children's children. And that's what we want to be able to do today and going into the future.
That is so awesome. I want to put the cherry on top of this beautiful cake that you have baked tonight for us. I would like to say a special thank you to Miss Renee Peterson McFadden, and to Mr. Garland Boyd, and also to our pink lady in the sky this evening, Miss Juliet Orr, who has been working in the background to bring our presentations and everything to you. I want to tell you that this is a community service that we are providing tonight for our community, because we love our community and we want us to begin to dive into these conversations and really protect ourselves, protect our legacy. This event tonight comes under the umbrella of economic legacy. And for those who had additional questions related to FAFSA and college education, we do have an event coming up on March 26th, an HBCU event, and the theme of that event will be related to finances. So you will be able to we'll have a lot of experts there who will be speaking about that. Also, there were some questions that we started hearing related to estate planning. So please know that we have experts that we have lined up. We have 2 events coming up. You'll get the information coming up related to estate planning, a part 1 and a part 2. Conversations questions that you may not even have known that you knew that you had. This is going to be the kind of forum where you will be able to ask questions just as you were able to tonight. So thank you. A link to this recording will be sent out to each of you. So for anyone who came late and said, oh my goodness, I wish I came earlier to get all of those wonderful nuggets that were dropped, guess what? We are recording this event and we will be sending out the link so that you can access it. And I can tell you it really was valuable. So I believe we just have 3 poll questions that we're just going to launch. If you would just respond, they're very easy. And I'd like to wish everyone on behalf of Alpha Kappa Alpha Sorority Incorporated, Epsilon Pi Omega Chapter. I am the Vice President, Kim Adams. And on behalf of our chapter, thank you for being here and have a lovely evening.